The global logistics industry moves trillions of dollars of goods every single year. Breaking into a market of that size usually carries a clear assumption. You need to own massive physical infrastructure to participate. This creates a difficult balancing act for prospective franchise owners. You might have excellent corporate skills and capital to deploy, but you specifically want to avoid the heavy overhead and lease agreements of a brick-and-mortar operation. The business-to-business logistics consultant model provides a direct alternative. It offers a way to scale a business without signing a retail lease. Traditional retail requires managing physical inventory and rotating entry-level staff. The consultant model strips that away, focusing your time strictly on high-value corporate relationships and leveraging an established network. This chart maps operational models by capital required and complexity. Bypassing real estate, the consultant model drops into the bottom left: low capital, low complexity. Traditional retail inevitably demands high capital and complexity. Instead, you operate as a node utilizing a broad, decentralized network. Pointe is a specific franchise operating exactly on this bridge. They function as a one-stop shop for a company's packaging, pallets, and shipping needs, but the franchisee doesn't actually buy the trucks or the warehouses. Avoiding physical asset ownership is a strategic choice. It allows an operator to capture high-margin revenue in the supply chain without taking on the restrictive overhead of traditional logistics. The foundational financials are outlined on this scorecard. Launching a Pointe franchise requires an initial investment ranging from $130,000 to $290,000, which secures a 10-year renewable term. That capital investment includes a comprehensive logistics training program and ongoing national marketing support from the corporate team. At its core, this is a brokerage model. Your primary function is to identify local market demand and connect it with specialized external supply. The exact mechanism is illustrated in this flowchart. You build relationships with local manufacturing clients and plug their needs into Pointe's massive, pre-established vendor network. This creates a dual outcome. The client saves money, and the franchisee earns a margin on the connection. Because the network handles fulfillment, the franchisee never has to manufacture a single product, lease a physical warehouse, or hold excess inventory. The vendor network executes across 3 core service pillars on your behalf: sourcing custom or recycled pallets, coordinating shipping services across North America, and supplying industrial packaging. Relying on a broad vendor network for these pillars also creates operational resilience. If one supplier experiences a shortage, you simply route the client's order to another vendor, insulating your business from localized supply chain shocks. Ultimately, the franchise fee buys immediate access to that pre-built vendor network. It allows the operator to step out of the role of a blue-collar manager and function entirely as a strategic logistics consultant. The daily reality of running this business takes you out of the storefront and into corporate environments. Your time is spent driving relationship-based B2B sales. In a food or retail service franchise, an owner might spend half their week managing a team of 20 part-time employees. The consulting model requires only minimal administrative staffing. Removing entry-level staff and mandatory weekend retail shifts gives the owner highly flexible control over their own schedule. Instead of putting out staffing fires, your daily focus is diagnosing procurement inefficiencies and waste removal problems for local operations managers. When you reliably solve a manufacturer's shipping bottlenecks, you become deeply embedded in their operational rhythm. You transition from a vendor to an essential partner. B2B clients operate on recurring needs. A local manufacturer isn't buying pallets once. They require new pallets and freight forwarding every single week to keep their doors open. It is a completely unglamorous industrial necessity, but that constant repetitive need translates directly into a highly stable, predictable revenue stream. Securing an account for one service naturally opens the door for cross-selling. Once you solve their pallet supply, it's a short step to taking over their freight forwarding and industrial packaging contracts as well. Because fulfillment is handled by the network, scaling your revenue requires adding more client relationships to your book of business, not building another physical warehouse. Combining minimal staffing requirements with recurring industrial demand results in a highly scalable business model. It adapts to the owner's lifestyle rather than dictating it. Selecting a franchise requires looking past the industry's profitability to see how the model's daily mechanics align with your personal operational strengths. The operator profile requires a corporate sales background. You should desire predictable standard hours, prefer low headcount, and value scaling revenue without added physical footprint. Supply Pointe has been refining this system since 2002. Incoming franchisees are plugging into an operational playbook with over 2 decades of testing behind it. If you are an investor who prefers to hold commercial real estate and directly manage large, complex teams in a storefront, this specific profile will not align with your goals. Identifying that precise operational fit is the single most critical step you can take to mitigate risk during any franchise investment. You can utilize the Certified Franchise Advisor program to evaluate your personal alignment with logistics consulting and other models professionally. To review the exact financial requirements and explore if the Supply Pointe model matches your wealth-building goals, visit nationalfranchiseassociation.com. The most effective franchise investments are those where the daily operational reality directly enables your lifestyle and financial goals.